Robert, let's start today with the leading indicators. And what is that information telling us about where the economy is going?
Yes, Susan. The leading indicators is an aggregation of 10 different variables designed to look about 3 to 6 months out in the economy. That has been sort of flat to down, and indeed the January number came down a tenth. Over the last 4 months, that index has not shown any momentum at all, and that is the concern. It's not retreating, going backwards, but it's not going forwards. And so no trend right now, and that's really consistent with this sense that the global economy, not just the US, but the global economy has gone through a shift now, and we're just not feeling as much momentum in early 2019 as we had, say, at the end of last summer when times were really good and just about all indicators were well in the positive territory.
Robert, let's move on to durable goods. What do you make of the data that's out today?
Yes, Susan, it's sort of a complex picture because it was positive and it was boosted by commercial aircraft, and those are really lumpy, big numbers, orders for new jets from Boeing and places like that. When you look at the core number, not as good, and some components have actually come back in recent months. Computers and electronic telecommunications type equipment has been a little bit soft there. So as a leading indicator for the overall manufacturing sector, I would say that's sort of sideways to a little bit soft, even though the headline number was decent.
And would you describe housing sales as sideways as well at this point?
Yeah, housing is another place where the economy is underperforming. Existing home sales data has been soft, and it's been soft now for about a year and a half, and that downtrend has been accelerating. So we're used to thinking about housing leading the US economy, growing faster than the overall pace of GDP. That is not happening right now. Housing is a drag on the US economy. Home sales, both new and existing, have come back. Now, the plus side, we can say, just in the short term, is that home mortgage rates have come down. I'm expecting that to be a positive for home sales in February and into March.
Robert, you've reviewed the notes from the last Fed meeting. What can you tell us about what they're looking at?
Yes, Susan, the end of January meeting by the Federal Reserve, I think, was very important. It was not important in terms of interest rate policy. They kept interest rates unchanged, and everyone in the world expected that. But what we got from the minutes is more insight to what they're doing with the balance sheet, and that affects overall liquidity in the banking and financial systems. And what the whole financial system has been waiting to find out is what's the end point of balance sheet runoff. And we got a pretty firm indication that the Fed is going to be ending that process of reducing its balance sheet by the end of this year. And they're going to get close to a target level of about $3.5 trillion. And so another way we can say this is we've had 3 rounds of quantitative easing. Balance sheet runoff is viewed as quantitative tightening, and we're going to be out of quantitative tightening by the end of this year.